Coach, I can hear you loud and clear. Check on my end.
I just realized they couldn't hear me though, Coach. You should be able to hear me now, viewers. You sound great to me, Coach Paul.
All right.
Let's get a confirmation in the chat and we will continue on. Let's see what we got here. Wild day in the markets. All good now. Audio, video, good. Thank you, Andrew. Welcome to At the Buzz Hour Market Recap. If this is your first time here, I am Coach Jay. That is Coach Paul. The goal of this segment is to review what happened in the markets for the day. We may talk about some markets that you have not traded before, but our goal as traders is to identify opportunity, see how we could have taken advantage of opportunities while managing our risk. But we are going to talk about some markets that you traded before. Of course, we know that everyone was waiting for the Super Bowl today, Coach, and sometimes the hype is better than the party.
Man.
I'll say that much.
It's so much like many Super Bowls.
Yeah. Oh yeah. Yep. You get
Very
you get
hard.
your
Well,
popcorn, your wings, and then it's just not a great game, or it was a great game, depending on how you traded it. But we will get into the markets. We do know that we had the Fed rate decision today. There was the debate between whether or not there would be a 25 basis point or 50 basis point cut. We do know now that we had a 50 basis point cut. Not so much of a reaction from the markets, but we'll get into that. But Coach, what does that mean, that 50 basis point cut, if you can get into that a little bit?
well, the Fed funds rate is going to go down by a 0.5% rate. It'll make it cheaper for banks to borrow against the central bank, the Fed, which should help lower interest rates across the spectrum. But interestingly, that's all economics and finance. The result was the bonds were down a point.
Okay.
And we talked about this earlier in the week. What would happen? I would expect the interest rate futures to rally. They did the opposite. And that goes to the point of risk management. It's going to be interesting to see what happens from here on. But we'll get more into that later in the show. But the fact that all the interest rate futures were lower, which means they're projecting higher rates, is not what you would expect. And okay,
might have a problem.
Oh, there we go. That's the one. Sounds much better.
There we go. Sorry about that.
All good.
So going back, maybe you missed it. I'll repeat it. One would expect the interest rate futures to rally. They did the opposite. It was a big down move in the bonds of a point, which would be a anomaly.
Right.
Going forward, now we're past this. There's some realities that are going to set in. And what are those realities? Government debt that has to be financed. So we'll see. The market did not react in a way that would be expected, and at least in the interest rate front. Interestingly enough, the range today in the S&P was 80.5. The average true range is 83.
There you go. Average day.
The ATR in the NASDAQ was 374. Came in the actual range 339. So
pretty average day.
I would say we talk about you never know.
Yep. Yeah, we could have had a huge reaction, and it's still yet to be determined. I think tomorrow and Friday may present some more trending markets. Coach Hoops just saying that in the chat as well. Watch out for tomorrow, and we will see. We do know that there's a press conference after the rate decision is made. Some comments from Chairman Powell. If the economy remains solid and inflation persists, we can dial back policy more slowly. Looking at FedWatch for the next rate cut, which would be in November, right now we're seeing a 65% probability of a 25 basis point cut. we know between now and November, that is going to change probably 100 times.
Um,
And
yeah, but
comments on the rate decision. Our decision today reflects growing confidence that strength in the labor market can be maintained. Depending on who you ask, there are varying levels of strength in this labor market.
it sounds like alphabet soup to me. Um, if then where and as traders,
Mhm.
where does that take us?
Yeah,
We're still in an uncertain environment. We always will be.
very much so.
So sometimes, best decision is not to trade on days like today. Um,
Yep. Not to
and
trade,
then
maybe trade small.
in trade, yeah, because even today at both sides, I guess it traded both sides of the market on lower than expected volume. So
Yep.
um, we'll go over the technicals in a minute, but the news came out, and really a muted reaction.
Muted for sure. We're still very much in that range. Not sure what exactly the market's waiting for. Maybe the election. Uh, let's go over the top percentage movers real quick, and then we will dive right into these charts. To the downside, coming in at number 3, we have the bonds, ultra bonds, down 1.14%. Uh, Nat gas down 1.29%. Actually, that's not true. That's a different net gas. We're going to ignore that one. Crude oil down 1.13%. Ultra bonds down 1.14. Silver down 1.93%. To the upside, we have lean hogs up 0.49%. Soybeans up 0.89. And soybean oil up 1.18% for our biggest percentage mover to the upside. For the major markets that we trade, the NASDAQ down 0.11%. The S&Ps down 0.11%. Very violently unchanged markets. We already talked about crude oil and gold. Where's gold on this list? Did I not put gold on the list? There's gold.
Oh,
Down 0.29% in gold after making a new all-time high on a reaction. If you wanted the action, it was definitely in gold. We will talk about that market when we get there. But let's go through our normal sequence. We will start with the S&Ps, Coach. I'm going down to a 30-minute chart.
all
And
right.
wow, highs and the lows.
What
Very,
interesting thing I see right away is we closed at the closed under the 200-day moving average.
mm,
If this is to rally, it's got to do it like tomorrow morning. If not,
right.
to me, I think this can gather some momentum to the downside. But interesting, look where we are right now, right on that 200 bar moving average.
hmm
The shorter term moving averages are a little higher than that. Um, Boy, can you say balanced?
Yeah,
Um,
very, very balanced right now. Markets right now, ES trading around that 5,700 major psychological level, uh, balanced around there. And, we did have a pretty nice rally the first 2
sure.
weeks of September, and maybe we are just kind of basing out before another move here. I think what we were saying is that the market is making a decision about how it's going to react to this number. We're still not in the clear yet, where this could also just be highs of this range and we sell off. If we look at a daily chart, still looks very bullish, but again, maybe slowing down just a little bit. We're not far from all-time highs, less than 100 points away from an all-time high, and even closer at the highs of the day. We were only 25 points away from that all-time high. So
Yeah.
it looked really good for a minute. It looked like it was going to rally, and then sold right back into the range. The market deciding that the prices that we're trading right now are fair prices, and we're going to stay here for the moment.
Yeah, it's interesting. It's holding its shorter than the 50-day moving average
hmm
and the 20. So as far as that's we
Yeah,
really didn't move. So
didn't move much at all. If we go down to a shorter time frame, and we did have some house account trades in the ES towards the end of the day, I think the team was very patient early on. I think there was one trade that was taken during fast markets with Deanna, Nick for a tick. Uh, Again, kind of going with the theme of being patient for the day. And if we look at this is a 3 minute chart. This looks like uh, an overnight session the day before Christmas, um, where there's really not a lot of price action at all. Really tight ranges. This was the entire session. High to low was a 27-point range in the ES prior to the decision. It's a really tight range. And what it did really, if we look at how long the market took to traverse both sides of that range, it was 4 hours, where most of the time was spent kind of chopping around in the middle here. We can call that an even tighter range of about 10 points. And if you were not short from the open, I think it was a really tough day to trade. And that was to be expected.
Yeah, and what do we get out? When we talk about waiting till after the number,
Hmm.
um, actually, there was a trade there where the J's volume on the highs after the number. We had that big volume up,
Yep.
and there it is again.
Yes, there
That
is.
is a
So
classic J trade.
I changed my fibs. Shouldn't have done that. Let's see. Let's frame out this news candle, right? And so what I'm taking from this is not the market's reaction so much uh, on the print. I want to see how the market responds to these prices going forward. The low of the range from the FOMC candle, 56.86. The high, 57.56. Huge range, almost 100 points, about 80 points. I want to see how the market responds to that. Right, Coach, you were talking about um,
The
this candle
volume,
here. Yep.
yep. The second candle, which was the selling candle.
Hmm.
And then we got underneath that low of that selling candle, the second one, it never recovered.
Coach
I
Paul,
mean,
you're saying the J trade. Can you please explain that one for someone who may be a
okay.
new viewer?
Um, well, I've been working with Coach Jay for almost a year now. Um, and here's the J trade on a big volume spike, which would came, and this is a 3-minute chart.
Hmm.
We had the largest volume from the event in the news event. All right, we make the high, we establish that range. The next candle, lesser volume to the sell side. All right, and still under the low of the big volume candle. Now, right there, one of the things that comes to mind is all the king's horses and all the king's men couldn't push it higher again. So
Hmm.
we had this flush. Think about it. It's like a horse that's been winning 3/4 of the way around the track, and then it starts slowing down, and it gets past. It's not going to recover.
Right.
That's what it feels like to me. Then the next candle after the event, we have selling, and then we get below that candle, the next candle,
This one
and
here.
that's the one I see. That's when it breaks that low, put a stop under the previous candle's low, and get a position to sell that, stop at new highs, figure out your risk. We see this in many different
Very often.
markets very often. Why I don't trade that and look for it every time, uh,
I
because
don't know myself.
I don't want the money.
Could all be so simple, but we would rather make
things
it hard. Wise
things you
words by
never
one
hear.
Lauren Hill. I do want to point something out real quick. I want to look at this 5730 level, and you guys know that I do a lot of volume analysis. Hogue brought this up as well. 5730, I think, is going to be an interesting level to watch going forward, and I'll show you why in a second. I'm going to switch over to another platform on Quantower real quick. and show you exactly what I'm looking at. So give me a second. Let's switch over there. And should have brought it up. Let's see why it didn't. Give me 1 second. Here we go. There it is. All right. So this is a depth of market on Quantower. I took off all the other stuff. What I really want to point out here is this 5730 level here. 5730. I have the volume at that level traded for the day and the delta traded for the day. And normally we don't share this on here, but you might hear Hogue talking about, an iceberg order. This is a perfect example to me of an iceberg order. We have 6,300, 6,400 contracts traded at one price, positive 4,700 delta at that one price alone. So what that,
Coach,
yep, go ahead, coach.
yeah, could you say what the positive delta
Abs-
means?
Absolutely. So delta is measuring, in simple terms, measuring the volume of market buys or market sells, right? So
So it's
they're
the difference.
correct. It is this is showing the difference between market buys and market sells at this specific price, right? So at this price, we had 6,400 contracts traded. 470, 4,700 of those contracts were to the buy side. That's the way I'm reading that. So if you think about what that means, in order to trade this price, 4,700 contracts more were bought than sold. Where did we close? We closed almost 40 points lower than this. Any buyer that's here and still holding that position, the way I'm reading that, is trapped in that position right now. Right. And likely to be a seller. And when they're not getting what they want, right, they keep buying it. And every time they buy at 57.30, there's another order there that is just absorbing all of their buying. So they're buying it, and when you buy something, you would expect that the price goes up if you want to make money on it. They're continuing to buy it, and I'll go back to Top Step X in a minute, but we'll look at that 57.30 level. They're continuing to buy there and not getting any price action in their favor. If they continue to buy for that long and don't get it, eventually buyers become sellers, and that's why we see price drop. We got another smaller one here at 57.25, 7,500 contracts traded there, positive 3650 delta. So 3,600 contracts, positive delta. Again, these buyers likely trapped in that position if price does not trade over it. And you can see what all the other levels and why I'm pointing that out, because everything else looks pretty inconsequential, right? There's not a lot that sticks out here, but this one is the what I would call the delta point of control, right? Where the largest amount of delta, whether positive or negative, is at that 57.30 level. I think that's going to be very important going forward. And I'm just going to scroll this down real quick. This one looks big, right? Where we have positive 1,000 delta, but 11,000 contracts were traded at that price. 57.05 doesn't mean as much, right? But
Percentage wise.
exactly, the percentage of delta uh, in relation to the volume that's traded at that price is huge.
And we've talked about volume is what drives a market.
Right.
It's the imbalance. So if I'm getting this right, you're describing an imbalance at that price at 30
Correct. Correct.
that failed.
Correct. They tried to buy it and could not get price to move higher. And coach, what happens when you buy something and it doesn't go in your direction?
You got to get out,
You got to get out.
or you got to hold it and put up margin.
Exactly. So one of the two. Likely the market participants at this price that were buying to create that delta, I'm going to go with, a large percentage of them are probably not day trading, right? They may be holding onto a position, but like coach just said, you got to put up margins. So in order to get back to this price and above it, and we're going with a hypothetical that they're buying to open a position at that price, you're going to need to see some buying under it and then above to continue to push up. But on a day trade perspective, and we'll go back to the Top Step X charts, we'll look at that 57.30 and 57.25 area. I have it marked out with these blue lines on the chart. We can see price. I'll do that one more time. 57.25, 57.30. we can see price rejecting in that area, right? So all
Well,
those buyers, go ahead, coach.
5730 is that highest blue line.
Correct.
Well, funny. Okay. Well, this happened, and that volume, does that all day volume?
Yep, that is for the entire session.
So cumulative volume at that price.
Hmm.
So cumulatively, easy to say, there was buying up at the upper near the highs
Hmm.
that couldn't. They got rejected. And interestingly, that's right there where that failure candle comes.
Right. And Courtney makes a good point in the chat. She says it could also be buying to close. It could.
Yep.
It could.
It could be buying for hedging for options. It could
Mhm.
be, and that's a very good point, because I struggled with that for a long time, because I came from an options background where we're a lot of hedging in the bond options, and the one thing, a lot of options volume comes to the futures
Mhm.
market. So without going too deep, because we're not trading options, but the key word was cumulative. So whether it was um, how many people buying one lots, or it
Right.
was one at the bottom line is that cumulative buying
The,
couldn't push it, couldn't hold the level.
right. The way I like to think about it, coach, because we do get that question a lot when we talk about Delta, right? Where people are just like, well, it could be buying to close. So how do you know what the intentions of that market participant are? You don't. But let's just go with buying, right? You got two options to buy, either buy to open or buy to close. You're buying to open because you think the market's going to go up. You're buying to close because you think the market's going to go up. Right? So now
You're-
forget about, let's just see where a lot of that volume happened, right? It happened at 57.30. Great. So now the people who are buying to close this, well, let's go with the people who are buying to open.
Ooh,
Are they happy or upset right now? If I bought to open at 57.30, am I happy with where my position is or not?
coach, that was another thing. When you put that line there, how much time did we spend over
Not a lot.
5730?
Not a
You
lot
know,
at all.
I know some people don't care about time, but here you just said it. If those buyers are not getting a reaction,
Hmm. Yeah. Now,
it,
now my 4,000 lot position is 50 points underwater, and maybe I have the risk, threshold to hold that because I'm a long-term market participant and I'm holding it for all-time highs. But if you're a day trader, you're not happy, right? So watching the the price that they interacted with, to me, is important, and then watching the reaction to that price, because then you can read, hey, if I'm a market participant who bought to open here, I'm not happy. And the longer we reject here, the more angry I get, and eventually I have to sell out of here. If you
or
bought to
fearful.
exactly. If you bought to close here, um, let's just think about it. And again, we're getting a little bit technical here, but let's think about it. How many market participants are buying to close here, do we think, at 57.30 with that much size? Maybe you were short in this move, but I would think if you were buying the close and you were trading that much size, hopefully you got out somewhere well before this entire rally, right? Maybe you were short from down here, 5,200. I would think that you got out somewhere before here, or maybe that was the tail end of your position, right? Where this market is trading right now, if we saw all of that positive delta at the bottom of a move, I would think that that was probably more short covering. But where this is happening, it looks like buyers trying to step in, and this is just my personal read. I could be wrong. It looks like buyers trying to step in and just not being able to move price yet.
You know, coach, is interesting. I had my first level of resistance at 5732.
Yep.
And I'm looking at a 30-minute bar. We never close. Here's another. We talk about time. We never closed above that level, and we spiked above it. We wicked above it. So at that time, while it was trading up there, VWAP was about 20 points lower. That's the definition of weak buying.
Right.
If that was strong buying, the VWAP would be right at that price.
Mhm.
Look at that. Wow. That's a great example of volume. You're the best at that, Coach,
I think I'm
that
okay.
I've seen.
I think I'm okay. I wouldn't say I'm the best. I wouldn't say
Leave
that
it
at
to
all.
me.
I'm great at analyzing it.
Trading it.
Wishy-washy at trading it sometimes. I've been going through a little bit of a bad streak where I need to make some adjustments here, but we'll talk about that later. Palmetto asked the question: did I see things correctly? Was the house account down 29K today? Nope, you saw that correctly. We were looking for an end of the day rally. With the trade that was put on was a look for an end of the day rally. Ultimately, we did not get one. The market kind of rejected at that 5,700 level. We had a pretty, from my view, we had a pretty flat VWAP, which tells me range bound market, where, that 5703 area was kind of in the middle of the range, but it was an idea that the team put on, risk was managed. And I saw somebody say, don't look at the P&L, it's all relative. If that was a 3-lot trade, we would be down, what's that? Let me make sure, 2,900 instead of 29,000, right? So that it is a bigger account. Are we going to get trades right all the time? We're not. What do you think about that trade, Coach?
It was a measured risk, and it didn't work out.
Mhm.
Now, the size of the loss is, if you're trading a small account, this is not a small account. It's relative, like you just said. The daily loss limit in that account is $50,000.
Right. So half of a DLL, a little bit more than half. Palmetto says you're going to be looking at the moon phases. We do have a full moon, right? So
Super moon.
for our moon traders,
Was that today or tomorrow?
I think I don't know.
I don't know. But if you've never seen it, it's pretty cool when it rises. If you have if it's clear, it's well worth watching. Also tells me winter's coming.
And
Fall is upon us.
Millions Tick is saying, you would bet that these were new buyers. I would agree. These were likely new buyers up here. If they were rolling over, they ideally probably rolled at a better price, or maybe they were late to the roll. Whatever it was, to me, it looks like new buyers. We will see how the market responds when we get back up to those prices, if and when we do. Let's move over to anything else you got on the ES, Coach, before we move to the ES. So we're on the ES
No.
to the NASDAQ.
No.
NASDAQ, pretty much the same story. Pretty much the same story. We'll go to a 30-minute chart. We extended ranges from yesterday to the high and to the low, but I'll throw your moving averages back on here, Coach. We haven't moved.
Yeah.
Same
Wow.
story. Same story. Made a high of the day at 19,900. It did look like we were going to rally up to 20K on the news. And Powell started speaking. We came right back down. Not too much here either. You could frame out that news candle. Let's do that. The high of the candle was 19,900, and the low was around 19,634. I would pay attention to those ranges as well. And this looks like the same trade, right? Where we sold. Actually, July 11th. What was the news on July 11th?
The yen trade.
Yen trade.
The
It looked
reverse.
very similar to this. Actually, let's go back there because it looks very, very similar. Where are we? We had news. It made a high, and at the end of what was a rally, although this was a longer time frame rally, we made the high and then sold off. We were above the moving averages. This to me looks very similar to what we're seeing right now. I could be wrong, but
Well, it's usually, the failure to continue with buying
yes,
is concerning for bulls.
Correct.
I mean,
And that could all change tomorrow.
by the way, let's go back to the beginning or what just happened a couple hours ago.
Mhm.
The Fed cut rates by 50 basis points. They cut it by a half a percent. That's not that's considerable cut.
Yeah.
That should be friendly.
Yep.
Um,
But does too much of a cut cause concern in the market that we're not as healthy as they say we are?
hmm, Good perspective. I don't know. What did Chairman Powell say? I didn't listen.
He
I
he said
can't.
that he said the market's in a great condition. If inflation keeps lowering, then we're good. Nothing to see here. It's okay. That's what
Pay
he
no
said.
attention.
That's what he
Pay
said.
no attention to the man
Right.
behind the curtain, right?
But when you ask,
Um,
I think when you have conversation with people about, grocery prices and the labor market and things like that, there's a different sentiment. So I think it might be a, hey, let's not. I don't know. I don't know. I think to me that press conference seemed like, uh, let's not cause a stir.
that's what they always try not to
Yeah.
do. It's not they're there to bring stability.
Right.
They all get good at the talking a lot without saying anything. What is the result?
Hmm.
There's a 50 basis point cut in interest rates, which is
Right.
more than I thought there would be. But the market knows better than me. What was it? 65% yesterday?
65%. That's correct.
Yeah. Um, but the result is this. We rallied and broke and finished basically where we started.
Right. Uh, let's see if we got any questions in the chat. Does the gap from rollover count as a gap? I wouldn't count it. I wouldn't count that as a gap. I think we did trade through it, or if not, we will trade through it most likely. But I wouldn't count that as a gap.
No, because that's not a real gap from the roll.
Hmm.
It's just a difference of different contracts. That's why I use continuation charts.
Right.
Those gaps are just created by the roll and not by any other. So
And then there was a question on the delta read in the Nasdaq around 19,850. Give me 1 second, and I will pull that up. So 19,843. There was, so the Nasdaq and the ES are, because the Nasdaq with these quarter ticks, and we see how thin the order books are. These delta numbers, when you see something big like 220 is big here. But let me try to do something here. I want to use a custom. There we go. So we'll go each point, right? That might give us a little bit of a better view of this. We'll go each point instead of each quarter tick. Uh,
coach, now you brought that.
yeah.
I would, if I were king of the Merc, I would get rid of the quarter ticks. What sense is that keeping that? It's actually creating a lot. To me, it's creating a problem.
Yeah, yeah, I would say so. These prices were created when the Nasdaq were,
Was
these
it
tick values,
1,000?
right? Maybe time to make an adjustment. What were the prices that we were looking for Delta at? Let me check again. 19,850 to 60. 19,850 to 860. Let's see what we got. I don't see anything major sticking out here, but again, the Nasdaq books were really thin today, like really thin. I think there were times where I'm seeing a 6 tick spread while we're trading, um, which you don't want to be a part of, right? And one up, three down, right? Like,
Was it just in the mini? Was the micro filled in?
no, no,
Wow.
no, it wasn't. Yeah, I'm not seeing any real delta anomalies that stick out here. I'm looking for the delta point of control. There it is. Here's the delta point of control for the Nasdaq. It's down at 19,614, and it's 419 contracts out of 1,500 traded. Joe asked if there's a study on delta that we have in the Top Step Coaches Library. there are some videos on volume. I think in a few of those I did go through some delta reads. But we talk about it all the time on this segment on Topstep TV as well. But if you have questions, ask now, right? Ask any questions that you have. That's why we're here. We'll go back to the NASDAQ charts. Again, really didn't do too much. We will see how the market responds to this number. The one thing I am going to do, Coach, is anchor a VWAP to that FOMC report and leave it there.
Yeah. Now, it's funny talking about now that we've gone through this. Now we're all going to worry about the next. What's the next one? CPI, unenjoyment day.
Yep. There's always something.
Yeah.
There's always something. All right. Let's go to the market that actually moved today. Gold. Let's look at gold on a 30-minute chart. I'm going to take some of these drawings off of here. Got your moving averages, Coach. The 200 is the white one. Purple is the 50. Yellow is the 20. We were trending up in gold. Made new all-time highs. New all-time high in gold is the high of the day today. 26.27.2.
Well, what did we talk about yesterday? It looks good. It could make a new contract high and then break $20 or $30.
That's exactly what you said.
What it did.
That is exactly what you said yesterday.
Did
Make a
I
new
take
all-time high.
advantage of that? No.
I mean, you said 30 points, Coach. It dropped 50 points from that all-time high. So get better with your
Was
analysis.
it that much? Yeah. Now, here we're looking at that, and here, once again, on that high, how many points were we above VWAP?
Let's look
Or
at it. So
dollars. Let's just say dollars instead of points.
I will anchor a view up to the beginning of the day. We were
Oh, well,
pretty. It never moved. That's from the Globex Open. VWAP did not move the entire day.
No, if you bought that, and I'm just going back, is I wouldn't be comfortable. I like to have the VWAP moving up where I'm getting in.
Correct.
We've talked about this getting close to volume, because if volume is moving a market, right?
Right.
Think about this. There's buying. You want to be as close to that buying, not the end of the buying. And the buying started earlier. But look, when they stopped, came right back to VWAP in a hurry.
Mm-hmm.
Now, and this is buying the all-time high, right? Now, what happened at that point?
Got to take profit at some point.
Yeah, we had the volume explosion, and we didn't have a Jay's candle because on that highest volume, which would be event to the left, on the buying volume, we broke that high.
Mm-hmm. Got some
We didn't
continuation.
have opposite volume. But knowing this, that a VWAP from the open is important, because let's think about this. On that all-time high, there's a lot of air left underneath it. I'll call it air.
Yeah, a lot of space.
And if there's it's I think of it, it's like losing its momentum. Volume making is like the rocket fuel. It ran out of fuel.
Mm-hmm.
And I think that, I know there's people who look at different deviations from the VWAP, 2 deviations.
Yeah.
For those of you who are watching VWAP, it might be something to watch, because we've seen this multiple times.
Agreed.
It's almost better. I almost like it better than just pure price. Like,
yeah, outside of this being a news event and maybe wanting to wait for the reaction, I don't think this is a bad long to take, right? Where we would do this all the time, right? 3-minute opening range. Let's call this a 3-minute opening range, right? Instead of the biggest news of the what
the
was supposed to be the
century.
biggest news of the year, right? We frame out the range. The market closes outside of it. VWAP is kind of leaving to the upside, where maybe you could take this, right? Where you see the market like this, not a bad trade setup. Ideally, we would want the VWAP to have left the range, the VWAP anchored from the event. Um, and if let's say it did leave the range, right, where we have the daily VWAP from the Globex Open, which was flat, which to be expected, right? There's not going to be a whole lot of positioning and directional moves before, maybe positioning, but not directional moves before the event. But once the event happens, if the market reaction is positive to it and this VWAP left the range, I think that's a great buy, right? Where it looked like one for a little while, right? The high of the news candle is 26.15. We made a high on the day of 26.28. There's a 13-point move available there. It's not the biggest trade in the world. It's a scalp. But we've talked about maybe not needing to capture the entire trend of the market, and that being a trade setup. And if it continued to go, and we can see why it didn't continue to go, is because the VWAP never left that range, right? So if you were looking at this trade, let's say you bought it because you liked that positive reaction. If you're looking at this trade, how do you manage it? If volume is not coming with me, then I might be, like Coach said, air. There's a lot of air under me. I might be the only buyer up here.
This is a great time to answer a question by Bradley DC.
Okay.
Coaches, can you explain why the VWAP and or anchored VWAP show different prices on different chart time frames? Thanks in advance for the explanation. We're kind of getting into that right now.
Yep.
Let's start with the formulation of the equation for VWAP. Volume weighted average price. So different time frames are going to have different volume sums. Think of, let's go the hierarchy of a higher time frame. An hourly chart is going to have higher volume. So the equation's going to be different because as it's a different time frame with different variables. That biggest variable being the volume.
Right.
All right. There's more volume going to be calculated as you go down the hierarchy to the half hour, 15, 10, whatever, down to the 30-second. I don't know if it does that, whatever. It's going to be different because the equation is different. I hope that it helps explain that.
Yep. And then one thing I do suggest with anchored VWAP, I know sometimes with Topstep X, if you're using and just trading view charts in general, if you're using the VWAP indicator, it takes into account the visible range of the chart. I haven't seen personally that the anchored VWAP does that, right? Where I can zoom in and out and the price stays the same. And maybe that's just another case for using anchored VWAP, but I haven't seen it do that. And then we got another
Yeah,
question. Go ahead, Coach.
yeah, I haven't seen that either. It's just volume weighted. I mean, like one thing I'll go get. I studied the equation a while ago. I think we could do just Google it or
Chat GPT.
Chatty G it. Chatty G, it's what all the young kids are saying.
Oh yeah.
Yeah.
I'm not young anymore. Damn.
Damn.
So his Royal asked a pretty good question. If I did take this trade, right? And let's say I got into this long here on this breakout, my stop on this, if I'm getting into this trade and I see we hold VWAP on a close above here, on a close above this range, my stop is going to be at the 50% level here, right? Where that is about 10 points. And that's just a default area. Coach, I know for you, you're going to use an ATR as your stop. And if we look on a 3-minute chart, the ATR at the time of the trade was about 4 points. So around the same area, around that same area.
Yeah. And interesting, another thing is when I use stops as a parachute or an ejection seat.
Mm-hmm.
Here, using a VWAP example, if you bought it in the breakout, if it closes below VWAP, I'm done. So if you're not prepared to do that, you can say, well, I'll wait, maybe it'll get back above VWAP. You could do that, but the evidence is the buying,
They didn't.
they stopped.
Right. Yeah. The way I would read this, where, hey, we get to see the market like this, right? So VWAP looks like it's trying to leave that range. The high and low of the range are the black lines, right? It looks like it's trying to leave the range. I'm in maybe on a retest of VWAP and a breakout of the range. We're doing good, but volume's not coming with me. Doing okay. We're chopping around a little bit. Volume's trying to leave the range. Doing better. Maybe we trade up to 2650. Starting to slow down a little bit. Hasn't broken the low of this candle. But I'm looking at this VWAP
Volume
now
is
like, hey
average.
guys, does no one else agree with this trade? Like, why aren't we why aren't we leaving that range yet, right? The average price hasn't left that range. Price has, but it's empty. And now on a retest of it and break back through, maybe this is a break-even trade, close below, like Coach Paul just said. Maybe you take break-even because the information that got you into the trade changed a little bit, right? I got in here because volume looked like it was increasing. As soon as that volume looks like it's not agreeing with the trade anymore, then it's a different trade at that point. If this VWAP continued to be supportive on this way up, then that's one that I would just trail to the lows of, pivots. But because it didn't go with it, you have to get out.
Wow. That was a great out.
Right.
And you might never here, and I'm going to talk about the mindset. You might, two ways this goes. Hey, I was up X, right? I was up more than I got than it is now. And you're like, oh, well, it's got to go back. Because why? And it's almost like taking a toy away from a child. You're like, hey, that was mine.
Right.
And you freeze, or you just be objective and take. In this case, what we're showing in this example is if you got in on VWAP on an anchored VWAP and it gets below the VWAP, you can always get back in if it gets above VWAP.
Yep.
And that helps limit losses. We talked about this all the time. Cutting your losses, letting your winners ride. Well, there it is. Or you can wait for it to hit your stop. Whatever
Absolutely.
you're comfortable with. I just like if the buyings, if they don't want it, I don't want it.
I agree with you there, Coach. We got Pi saying if you throw a 13 simple moving average on, you'll find a better
Mm,
entry. I think it's going to depend on the time frame that you're looking at. I put a 13 on here, and I don't know that I would have ever gotten into a long. Um, Not after the news because the market never came back down to that 13. But I do know that it depends on that time frame as well. And maybe you were talking about an entry for a short where we get a close under that 13 and go from there.
yeah. And the key is whatever I've used the 13 before.
Mhm.
Um, it's a Fibonacci number. Um, it's 21, 55. Whatever it is, it has to be consistent.
Yep.
It,
Bre-
it, it really has to be consistent.
Yeah, whatever. Yeah, and you might be looking at a 5 minute chart, and it's using that 13 as a perfect support the entire way up. And that's what Coach is saying, right? It has to be consistent. For me, on a 3 minute chart, I haven't done enough research on the 13 to use it. Bradley has a good question about the switch sides of VWAP. Um, when the market goes from above VWAP to below it, do you typically switch sides from long to short? Do I and should I are two different questions. Have I? Yes. Is it always a good idea? No. Right. So it's about the market reaction and a quick flip of it. In this case, would have worked out, right? Where if you got to close below it, you want to go short and then risk the candle that broke it. Maybe not a bad trade, but I also think that you have to be conscious of the trend of VWAP, right? If it's a flat VWAP, I probably wouldn't do that because any trades on VWAP are likely right in the middle of the range. And
Wow.
then if this is a strong trend up, if this is a strong trend up and we get a candle that breaks through it pretty strong, you may get a nice continuation flush move. But what I really like about this is you let the candle close. Let's say I was long. I let the candle close below. Look at how many opportunities it gave you to flip short, on a test and rejection of it, right? So give it some time and maybe not a, and I know you might not be saying, hit the reverse button when it crosses. But I think it's okay to switch your bias on this if you find that, you know, the sellers are actually in control. But I think give it a little bit of time for it to confirm that, right? Before switching.
That's a great point and a good question.
Yep.
I, from my experience, I don't like to flip.
Hmm.
I like to trade different markets. So on this one, if I bought it on this, I'm looking to buy gold overall. The trend is up, but I mean, depending on your style. But
Yeah,
overall, I know this: it's not really. It's very hard to maintain risk management when you're flipping a lot.
absolutely. Absolutely. Yeah, because you're flipping right at the point of decision basically for the market. And maybe they just needed to transfer some funds before they continued to buy it. And by the time by the time you flip your bias, they're just like, okay, yep, buy another 100 million, and then the market goes where you thought it was going to go. Let the market confirm whether or not it actually is flipping their bias.
Coach,
Mhm.
that actually looks like a bond chart,
Yeah.
like or a 10-year chart. I think that one.
I mean, yeah, it looks pretty much like the 10-year.
So the gold initial reaction was, oh, that's a half a point cut, inflation ahead, and bonds didn't 10 years didn't react well. They
Mhm.
they broke. I mean, if you told me that bonds would be a point lower, I would give it a very low probability.
On news
Can't
of
say
a
that's
cut,
never
right?
going to of a
Because
news of a cut,
rates go down, prices should go up.
especially a half a point. It wasn't a
Right.
quarter. So I think gold. Now remember, they're
JD says they were uninverting.
that we're uninverting.
Mhm.
Okay, um, it could be, but interestingly enough, that chart looks the same. It's like you could probably find there it is in. Is this a 10-year?
This is the 10-year. Yep.
And let's look at what the VWAP does. It means something.
Yeah. I don't even know what this anchor's from. Uh,
But let's just anchor from the news candle.
yep. We'll do that. Go down to a 3-minute chart, and I'm gonna assume that it didn't move. Yeah, it didn't move. So from a trade perspective, right, where I might be looking at this, um, because we are day trading, right? So we could talk about the higher time frame analysis. I might be looking at this as, you know, a potential pullback to 50% of this to buy it. But if VWAP doesn't go, you got to manage that trade accordingly, right? Where that's just another level of confluence that I'm using in my trades. Let's say I like this area for a buy, great. If I'm in it and it's not going with me, maybe we're just in a range.
Yeah. Once again, VWAP couldn't leave that range because it never broke the high of that candle.
Hmm.
So for VWAP, and let's go back to the equation of VWAP, it has to break through that high at the very least because it's
Right.
going to calculate it. So it's going to take buy volume to make a new high. This is a great discussion. And really, when you think about just the equation itself, and we talked this, it don't trade in front of the number, like straight, don't have a position here and wait for the reaction. Here is the one. If you wanted to sell it, if I wanted to buy it, make a new high
Right.
at the very least. At the very least,
Yeah. Show me someone else wants to buy it first.
and then measure out your risk. And if you're willing to accept that risk and not be crying, "Don't come to me." Who was saying that? Don't come to me if
Muhammad,
you have
don't
a
cry to
loss.
Muhammad if you're he always says
Don't
when you're on the wrong side of the market. But honestly, he's usually right about his ideas. I think he's great at his market analysis. Um, don't cry to Muhammad. Can we check the crude? Let's go to crude real quick. I do want to end a
Yeah,
little bit
yeah,
on time here. We got Coach Hoop doing a segment in Discord. And Coach Hoop, I did create that event for you. So you should have that in there. Joe says, can we check crude VWAP on the FOMC candle would have given a good short? Let's see.
yeah.
It's the same. Honestly, all of these markets look exactly the same where they reacted positively, but volume never went in any of these markets.
And actually, we found out there it is. Now let's think about this. This is great. It all looks the same. None of them made the initial reaction.
Mhm.
Didn't follow through to the upside. At
Nope.
the very least, that has to happen after the news. That made it, and look what happens. We Even if you bought it inside that when it got under VWAP, you're going against the flow of the river. Well,
At
that's
that
the
point.
best way I can put it at that point.
Yep. Hmm.
And a $50 or $100 at that point, whatever it is, looks like a winner right now.
Yeah. The, I do. So I will say there have been trades that I've taken under that VWAP, but that trade is a lot different than what this one looks like, right? Buying here, if I'm reviewing this and I see this, let's say I let the dust settle and I see this, volume never got higher than 75% of that range, right? If we get one of those quick flush moves that we saw in the NASDAQ, but this VWAP was tilted to the upside, that might be some of the best trade location you could get for the buy side, right? If this VWAP was a 45-degree angle up and the market sold off, because now you're getting a better buy than the average price. But that looks like one of those failed selling moves that we see, coach, right? Where if this was going up, we see the market try to push lower, they get absorbed, maybe somewhere near the lows here. That's a much better buy. But because this is such a flat angle, there was no one interested in trading this. Look at the volume. Like
Yeah, look at the volume.
no one was
So,
interested in trading it at all.
oh, actually, Coach, that's a Jay's candle.
This one here.
Yeah, look, we had the selling right after the big volume buying, the
Hmm.
news candle, and when we broke that low, it never recovers.
Yep.
I think every market did that today.
I think they all did. I think they all did. Rollover gaps do not count as gaps. They do not. I got one more question here, coach. What can we expect tomorrow after what happened today?
Very good question, and I'm not being snide. I don't know. I really don't know what we can expect. I think is some more volatility. I think we'll have more volatility. I think now, and I'll end the day with this: is trade in the present.
Hmm.
Look for your trade when you're trading the present. You can negate um, the expectations.
Right.
Because
Exactly.
expectations, you'll anchor to the expectation subconsciously, and it's hard to trade that way. So, um, try to have your game plan. Look for your setups. Trade your plan.
Yep.
Remain in the present. Um, if I had to guess, and I don't, so I won't guess. But I'm not trying to be a jerk here. I'm just saying
It's honest.
part of having a good mindset for trading is not having the least amount of expectations. I would say expect to execute your trading plan.
That's the key. That is the key. Regardless of what the market presents, if you have a plan to trade it, that yeah, do that. And if it doesn't present an opportunity for you to take your trades, then don't do nothing, and that's okay. As far as news goes, tomorrow we do have, what is BOE? Is that Bank of England?
Bank of England.
They have a rate decision
Just
tomorrow as well. We have jobless claims and home sales out tomorrow. More news on the calendar. I agree with what, one of our, I don't know how to say that name. I know you as Millions Ticket in Discord, but I think employment numbers and housing starts are going to be important candles to frame out going forward. I would agree with that as well, because Powell just told us that the labor market was okay. If those numbers don't come out great tomorrow, somebody's lying.
or at least look at the revision. But I will, speaking of expectation, the Bank of England's making a interest rate decision. So tonight you could see some volatility.
Right.
That's good to know.
Absolutely. Well, thank you everyone for joining. Do remember that we do have classes in Discord pretty much all the time. Topstep has education for you. Coach Hoop is actually doing his first segment in Discord, so show some love to Coach Hoop. Go over there and join him for his first segment. And then right after that, we have Coach Ray, and then Coach Vince, and of course, Coach Dakota on slow markets. Tonight, I will be on with Coach Dakota for slow markets. I got nothing else, Coach. Have a great day, everyone. Any words before we go?
Smash the like button. We haven't said it all day, so
hit that like button. Thank you everyone for joining.
Thanks.
We will catch you all tomorrow. Bye.
All right. Bye.